If you thought the last recession was bad, buckle up because things are going to get much worse, said enigmatic American billionaire investor, businessman, and vice chairman of Berkshire Hathaway, the conglomerate controlled by Warren Buffett, Charlie Munger. Charlie Munger rarely gives interviews, but when he does, it's always fascinating to get his perspective on the current state of the economy. People listen to Charlie Munger when he speaks. With a billion-dollar net worth and an outspoken personality, Charlie's the vice chairman of Berkshire Hathaway and Warren Buffett's business partner. This makes what you will see a rare treat, as does the fact that Munger rarely gives interviews. Charlie shared his thoughts and analysis on a variety of subjects, such as the likelihood of an upcoming recession, the Federal Reserve, Tesla, and Bitcoin. In an interview with Brian Quick on CNBC, Charlie Munger said, "I basically like the existence of the Fed." In addition, he added, "I believe that in a world of fiat currencies, we need wise central banks, and if you look at Japan today, you would discover that a central bank has turned our central bank into a small mouse that scarcely attempts to do anything. We know that the central banks can be very significant. If you have to and are in enough trouble, you can push them to the extremes. So generally speaking, I prefer central bankers, and generally speaking, I despise Bitcoin proponents." When you say that we resemble a mouse in comparison to Japan's central bank, is that a positive thing? Quick inquired. "Look at what has occurred to Japan. We haven't had to attempt it," Munger said, "but if we find ourselves in circumstances similar to what Japan experienced, we'll do the same stupid thing. Do you worry that the Fed will cause a recession by applying the brakes too firmly?" Fast followed up with, Munger stated, "I think the Fed is willing to have a small recession in order to avoid having out-of-control inflation. They're meant to be the only man at the party who doesn't hang out by the punch bowl and get wasted," he continued. "In addition, I believe we're already in jeopardy before this issue began. We would have been in a much worse situation now than we are if the Fed hadn't taken the actions it did. The American Federal Reserve has received a lot of media and public attention during the past few years. This is unfortunate since many people now blame the Fed for the highest inflation rate in 40 years and the faltering economy, which has not been good for publicity. For those who don't know, the Fed controls the money supply, sets interest rates, and oversees financial markets. The Fed made completely unprecedented moves at the beginning of 2020. In order to prevent the economy from imploding, the Federal Reserve cut interest rates to almost zero after businesses and millions of jobs vanished overnight. The Fed reduced interest rates, making it less expensive for businesses and individuals to borrow money. As a result, they borrowed more money and spent it, which boosted the economy. This assisted in sustaining economic growth and averting an eventual collapse, along with extensive government stimulus programs. Throughout the conversation, Charlie accepted the necessity of this course of action, but the Fed might have failed by delaying the increase in interest rates to levels closer to normal for too long. The Fed kept interest rates at zero in 2020 and 2021, despite the fact the economy was incredibly strong. Imagine a party with plenty of happy visitors to get a better idea of the Fed's function. Then picture a sizable punch bowl that is overflowing with the most delicious alcoholic beverage imaginable. Throughout the evening, everyone continues to party and have a good time while drinking more and more punch. Things are likely to spiral out of control sooner or later. Then, before it's too late, the Fed must step in and remove the punch bowl. In 2020 and 2021, the stock market was in full party mode. The headline focused on backs and meme stocks as stock values were skyrocketing. Moreover, day trading was once again fashionable, and stocks with low sales and no chance of profitability were fetching exorbitant prices. Warren Buffett and Charlie Munger were referred to be outdated due to their lack of participation. In the context of the punch bowl analogy, we can infer that the economy is experiencing a hangover comparable to what would occur if the punch bowl were left out for an extended period of time, which is one of the effects of leaving the punch bowl out for an extended period of time. Inflation is currently the top concern for Americans, as it is at its highest levels in decades. By swiftly raising interest rates to combat inflation, the Fed is currently making up for lost time. Rising interest rates make borrowing money more expensive, raising the overall cost of big-ticket items that customers frequently buy with credit, like homes, vehicles, furniture, and technology. For businesses, this means buying fewer new tools and materials and deferring updates. The economy will face less demand if interest rates are raised, which should reduce price inflation. One fundamental drawback to the inflation control strategy must be mentioned. The Fed is maintaining equilibrium. They also don't want to risk putting the economy into a deep recession by raising interest rates too quickly or severely. In the meantime, they want to make sure that the economy is slowed down sufficiently to restore inflation to a more normal level. The Fed has stated in the past that it will take all steps necessary to keep inflation under control. Chairman of the Federal Reserve Jeremy Powell is like a pilot trying to land a big plane on a narrow airstrip in a bad storm. There are two conceivable outcomes from this, the first of which is the soft landing, and a soft landing occurs when a central bank raises interest rates just enough to keep the economy from imploding, suffering from high inflation, and going into a terrible recession. A hard landing is another result. This type of action by the Fed does not reduce inflation, rather it triggers a catastrophic economic downturn. A hard landing would have long-lasting effects, unemployment, business closures, and a decline in the value of a household assets, such as its real estate and stock holdings. The Federal Reserve Board, led by Chairman Jeremy Powell, is in an awkward position where they must either take decisive action or risk losing credibility as a result of skyrocketing inflation. If Charlie Munger didn't give his frank opinion on numerous topics, the conversation wouldn't be complete. His criticism of Bitcoin and his remarks about Elon Musk and Tesla in particular jumped out. I was absolutely astonished that Tesla performed as well as it did, but I do not associate Tesla with Bitcoin, claims Munger. Tesla has actually benefited this society in a number of ways. Elon Musk has accomplished some admirable feats that others were unable to. What Tesla has accomplished in the automotive industry is a small miracle considering how long it has been since we had a new successful auto firm. Charlie Munger and Elon Musk haven't exactly been close buddies. In fact, Musk has recalled how he and Munger ate lunch together in 2009 and departed from the same table. In front of Elon, Munger spent the following hour or so detailing why Tesla will fail to everyone at the table. Munger doesn't particularly remember the meal, but Elon acknowledged that it did actually happen. Elon was more affected by the encounter than Charlie was, as shown by this. Charlie Munger was a direct as usual in his interview when he also revealed that his hate for Bitcoin. It bothers me to see people who were once thought of as highly respected people supporting these things as they grow and so forth in my own country. This is definitely not good. The nation didn't require a currency that is useful to kidnappers and other criminals. Despite the delusion you're witnessing, I believe they have the best intentions. It's a combination of delusion and deceit. It's not a good combo. Fraud and delusion bother me, though. I think the latter is more extreme. Nobody will be surprised to learn that a 12-year-old child can become a billionaire or anything, though. He simply refers to it as a Munger coin and begins trading it. It's insane and crazy. You'll have a lot better understanding of why Charlie Munger has such a broad distaste for Bitcoin and other crypto after you understand the distinctions between what he refers to as productive assets and non-productive assets. Something that generates wealth for you in methods other than the final sale of the commodity is referred to as a productive asset. Consider the possibility that you own a farm. You will receive crops from the farm each year that you can sell to generate revenue. At the end of each year, you will have both the asset and a sizable chunk of money. The farm, in this case, is another illustration as stocks. A modest ownership stake in a firm is essentially what you are purchasing when you buy a stock in it. The business should ideally generate the cash flow to which you are legally entitled to as a business owner. Whether it's an asset is productive assets or other kinds, its value is determined by the cash flow it produces over its useful life. You can only benefit from non-productive assets by selling them to someone else, preferably for more money. Silver and gold are among them. You will not receive any income from the amounts of gold you buy, and your fate will depend on the asset market's worth. The only thing that you can hope for is the item's worth will increase over time. Because of this, according to Warren, productive assets will almost certainly provide higher returns over time than non-productive ones. Consider a non-productive asset, Bitcoin. The assertions made by Munger that Bitcoin has no value are widely covered by the media. Since Bitcoin doesn't benefit its owner, it's also useless to him. When an asset's value is determined by the amount of money it will generate through its useful life, how do you assess a non-profitable asset?